talk about it because we haven't signed the documents yet, but we're in the process of working with some investment, outside investment. And their question to us has always been, and every bank will ask, is what is that risk? What should the risk premium be? For us, we can put a 50K system in place in 2.5 to 3.5 days, done. I can't get the paperwork done in less than 2 months. But I can't get a bank to finance me. That cost of transaction is so large in proportion to their return that they're not interested, even if I aggregate. I have 100 systems to 150 systems at 50K scale that are going to turn out to be 7 to 8 megawatt. And they're still reluctant, simply because it's something that's unknown. And that's the other factor that really comes into play here, is that as soon as people start to become, hey, my neighbor did it, she has it at her house, I want to do it on mine. It's so much easier. And a number of people have actually come up here and said, hey, I see your signs everywhere, right? And that's how we're getting most of our sales and our business right now. It's word of mouth. It's because their neighbor did it, their business partner did it, their friend on the business council did it. If they're the first ones, there's a huge amount of fear. If they're the second ones, it's like, okay, he already did it, they broke the ice, things are great. The third guy is like, God, I don't want to be third. I want to be the first guy to do it. So as this critical mass gets bigger, it's going to roll faster. But there are several things to look at here from a scale perspective. State versus federal, size versus risk, and timing of which. Mark Shear and I actually had some conversations recently. Mark and I are completely opposite ends of the spectrum. You have some huge, again, I don't want to say the number, I think it's like 20 or 50 megawatt or something projects going on. It's 1,000 times larger than what I'm talking about. Right? Yeah, but that's what's got to be looked at. And as we move along, where is this multi-gigawatt going to be installed? Is it going to be on houses? Is it going to be on small commercial? Is it going to be utility? And all those conversations really don't mix and match. They have to be addressed differently, I believe.
I would tend to agree with that. We deal as small as 1 megawatt solar, but we go to outside consulting engineers, and in order to be able to ensure production over the period of the term of the kinds of notes that we write. And we make sure that, again, everybody involved with the transaction, from the installers to the manufacturers to the GCs, are going to be around for 10 years. That's a major consideration for us. We cannot write a 10-year or 12, and we will go to a 12 or 15-year note now. But we can't risk that the people involved in the transaction, from the off-taker to the design engineers, are not going to be around. And the risk factor is a very big consideration for us.
Yeah, but one of the things about risk evaluation and that we've experienced, and before I was involved in solar development, I was in the EPC business, and my company that I sold was involved in 9,500 megawatts of wind construction. And so we were heavily involved. And one of the problems we're finding is that the financial institutions are not educated as to what the risks really are in solar.
That's very true.
And number one, construction risks. They're equating it to wind, for example. And anybody who's ever been involved in the construction of a wind plant and a solar plant, that is not comparing apples to apples. The other thing is operation and maintenance. Other than inverter maintenance in a solar plant, it's essentially just washing panels. There really isn't much else there. And the education of the lenders is a real problem that we're finding.
I'll tell you that it took us 3 years to find an organization, and now we have 3 of them, that will play private placement bond games for exactly that reason. It took us that long to educate, if you will, the financial houses to be sufficiently aware that the risk can be mitigated. For another thing that we do is we go to an insurance company to insure production, which makes the debtors very comfortable. But we also reduce the estimated production down to 85%. So not only do we get insurance, but the insurance is not at 100% production, it's at 85.
Well, and one of the problems out there right now is that, and AWS involved in this, they probably would agree with my assessment, is that there isn't really an industry-wide standard of how to assess the solar resource. I mean, NREL has PVSys out there, but you know, AWS looks at it one way, and one of their competitors look at it a different way, and we've seen across different groups 5 to 10% differences in assessment of the solar resources. And that's just huge.
Absolutely. But we figure that as part of quote-unquote an upside that can be shared among the participants of a special vehicle or a limited liability company. So that's the way we mitigate that. We make, you know, we've dealt with credit committees all over the place, both on the equity side and the debt side, and you have to make them comfortable, and it's structure that allows that to happen. So,
And
no, just to Mark's point, that even on the wind side, there's some generally accepted practices that are followed. And solar is on the utility scale, and the size that we're talking about as far as the volumes of installed base are falling behind wind, but the institutional investors, the institutional lenders have experienced in the 2007-2008 the recognition that the projects that were installed a few years before are underproducing based on the projections. So there's a part of the risk, the premium risk, is on the intermittent resource, that it's a renewable resource and that it's not as predictable as a pump or as a coal mine. There's some unpredictability associated with that is on the wind and the solar side is still evolving along that science.
Can I add one thing to that? I actually think that that's probably the industry maybe not doing as good of a job, quite candidly, and I hope I don't make anybody mad about this comment, but because I think we are actually underselling the true value proposition of solar. I hear you on that, right? That it's difficult to exactly gauge, you know, when exactly how much sun we're going to have at a particular point in time. But in the Southwest, I don't think that's an issue, number one. And number two, you know, if anything, I would argue the cost of capital, once the liquidity comes in the market for solar, should be lower than even some of the traditional solutions because it's actually competing with the peak power, right? You're basically looking at peak power solution, and those peak power, despite the price of natural gas where it is, we've done the levelized cost of energy analysis, which I think has been used by most folks from Lazard, right? Where it is still competitive at $4. So I think it's the education and the awareness that I think is still limited that actually really hurts the industry versus the other way around. I think we need to sell what the real value proposition of this sector is.
And I think Marie's right, there were a lot of bad experiences, more in wind than in solar.
Yes.
And wind's a much tougher resource to forecast than solar.
Yes.
Which I know you guys know that, you may be living it. But,
Pradeep?
So, I mean, how much of that is also related to developers not actually sharing information? Because there are already a bunch of installations. I mean, you know, solar's been around for 20, 30 years. Yes, it's not been in the megawatt scale, but or you know, the gigawatt scale like wind. But the information is there, and you know, correct me if I'm wrong, but a lot of the developers don't want to share how much profits they're making, and that's why they're not sharing this information. So that might be part of the issue, right?
You know, I happen to know of an installation that I helped finance the company that went public, and it was amorphous silicon, you know, the lowest efficiency thin film, and that's been up and running for 23 years, and it's performing above projections for all this time. Now, I can't speak that crystalline is going to be the same, but you know, it was in a very hot, humid environment. I think it's in Alabama, and it's been performing for 23 years at about 102%. And now they've revised the lifetime from 30 years to possibly up to 100. And this was the utility that did this projection, not the company. So it's out there. I think it's education and
we've been
experience.
financed for 100 years.
There's an interesting point around the kind of like different levels of construction risk, and it just doesn't make sense to kind of conflate the wind and solar construction risk. But there is one important point that bears mentioning, which is that there is a risk in solar that doesn't exist in wind that has to do with the viability of the companies providing the equipment. The wind companies themselves are not gonna go bankrupt. They might downsize capacity, Vestas might get acquired, we'll see kind of some consolidation. But you're not gonna see the wave of bankruptcies in the wind industry the way that we've already seen in the solar industry in the US. We're bound to see a couple more this year, and Chinese solar companies themselves are gonna be, we're gonna be kind of seeing some bankruptcies there. And the latest example of this is the scandal around the SunTech, basically. So it's something we haven't yet kind of seen play out on the wind side. And the reason this is important to mention is because I think that's a big concern on the debt side when you're looking at a project, is basically